Hello everyone, how are you? Today is Friday. Hopefully I'll release it today. Uh, so this is the first special for season one. And this is an episode that I've been wanting to do for a long time. Uh, and But I wanted to see a bit more data before I do it. Uh, not actually data. A data that shows commitment. Because for me, this is most probably the most essential part of the change that is taking place in Ethiopia. And I wanted to see whether there was a commitment or not. And I think this quarter, the one we just had between January and March, uh, spoke volume to me. And I reflected a few times on LinkedIn in the past few months, but I figured this might be a good time because it is part of the reason why I'm making, the sovereign operating system. Uh, it's an economic policy of sort, but a very targeted one. So yeah, and maybe a nice way to characterize it in terms of you know. So Ethiopia has been going through a reform agenda since 2018. And for me, tracking the National Bank of Ethiopia and the changes it has been going through over the past few years was strategically motivated in a sense that to truly understand uh, any change that is taking place in any ecosystem, it is usually important to track the resources that are critical to it, the inputs, and how they're going to be managed. In the modern day and age, financial resources are very critical. You could have all the vision you want, but if you don't know how to translate those visions into activities that facilitate the accumulation of wealth and then direct that wealth into a particular investment, then change is not going to get traction. So, a nice way to understand Ethiopia is that until this fiscal year, um, 2026, uh, Ethiopia really, the modern state has been more of an extractive uh, undertaking. Uh, it always, regardless of whatever name the government had, whether it be a monarchy, socialist republic, or revolutionary democracy, whatever, it has always been extractive. Now, I do feel like there is a systematic change taking place, and it is important to keep in mind what those changes are. And the National Bank of Ethiopia really highlights that. So until now, you know, people that were engaged in production, uh, you know, they were more like tenants. Okay, at the end of the day, the state decided pretty much everything else. Whatever they were producing, what it was worth, who they can sell it to, how it could be sold, this and that. So the central government really dictated a lot of things. And I do feel like Ethiopia is now moving multiple ways. One is we are integrating more into the global system, which is kind of ironic and interesting because as the world is trying to dismantle the global integration that took place, for us, we're a latecomers and we're trying to integrate now. But I think we get to do it in a bit different way, and we are already. So we'll talk about that down the road. And the other one is, basically opening our markets to outsiders. Uh, that's also interesting. And we are definitely highlighting the issue of sovereignty, be it in food security, be it in development, whatever. Uh, and we also have this political philosophy that's quite pragmatic and talks about uh, adding whatever works into the system rather than adhering to a particular ideology I guess the ideology is not to be idealistic about things and to really pursue things that work on the ground. If they bring you the type of solution you seek in a way that makes sense, in a way that complements each other, in a way that highlights harmony and facilitates a healthy interaction among members, not just the society, but also the ecosystem, then that's how it strives. I might do a session on it because it's one of the things that I've been interested in looking at. So, yeah, that's how it's good. I'm going to go through the rest of them pretty quick. But until now, Ethiopia was pretty much, the government decided how much one Ethiopian birr was worth relative to the dollar. So when I was young, it was about $1 was worth 2 birr and 0.7 cents. And then it went to 5, then it went to $8 something, it went to $10, and then 13, and then it was like whoosh. And then now it's about 150. So I'm telling you a story of since the early 1980s, late 80s, when the rate from 2 birr to what it is now. Now it's an open system. So increasingly you can basically, there is no direct determining there is no fixed rate. So it's more of an open system now. And I'll talk about that. Okay. Why, so the government has been basically, in the last 8 years trying to move away from state control to more of a managed market discovery, so that the market dictate a lot of the things. It doesn't mean that there aren't directed mechanisms to influence, but because in Ethiopia the public sector is still the biggest sector. But the key markers that came about was about a year and a half ago. A new legal framework for banking businesses was so. In that regard, governance and monopolies, how to break them up, and the like. For the banking sector, it was also a time where the banking sector became liberalized. Okay, before that, only Ethiopians, even Ethiopian diasporas, were kicked out of owning a share into Ethiopian banks. Okay, so only Ethiopian nationals. And another thing is Ethiopia does not allow for dual citizenship. So you have to have an Ethiopian passport to own a share in a bank. And then, of course, there's an effort going on in the financial sector modernization with NBE reforms and mergers and acquisitions, the legal framework and the guidelines, the directives coming out. They are expected. So that's why it's a big year this year for the financial industry in Ethiopia. We've launched a capital market with the Ethiopian capital market, and also foreign direct investment is really becoming a big one. And this is all part of the homegrown economic reform agenda. And, there are 5 priority sectors, you can go through and read about it. But I just want to focus on the last 3 months and what took place. Because, there's a lot going on, but the last 3 months peak volume, and you need to pay attention to them. Okay? Why was reform needed in the first place? You see, in Ethiopia, it was an open secret that the state apparatus was captured. Okay? It was captured by literally people who didn't have a healthy intention towards the government. To the people. At the end of the day, they were more interested in taking out. And this is not politicians or this or that. It's a collection of people from different sectors. They only prioritized certain things. One of them was, greed was a main issue. I talked about in the previous few videos how there were 3 things working together in Ethiopia to really make the country basically be stuck in a lot of things. One of them is greed, and crony capital, elite control, whatever you want to call it. And it is also networked. It's not just individual greed, but it is a networked one. And also there's in the financial sector, basically the financial sector was basically what facilitated corruption in Ethiopia. And it was protected, okay? Impunity was whatever happens, there's always a way out, seems like. And the financial system, the collaterals were not really collaterals. If you're a genuine business person, yes, you'll be asked for a collateral, and usually you'll be asked to, if you need $100,000 loan, then the banks would ask you for collateral worth 200 or more, 200,000 or more, which made no sense. There's no risk on the part of the banks. When it's their people, then it becomes, you may not even be asked for a collateral. Someone might just say, just give it to, okay? And also there's institutional ignorance that was embedded into the financial system, especially nepotism. And also, in Ethiopia, politics officially became identity-based politics in the 1990s. So banks were not really financial institutions first. You could describe them being, identity captured banking system, because almost all banks had some sort of identity. They were basically a few shareholders who controlled everything, and they came from a particular neighborhood, or they had a particular kind of affiliation with each other. Okay, so the key goal, I feel like, may not have been said outright in the policy documents, but it's going from this identity-based capital allocation to competence-driven market discovery. And so the post-reform goal, one was to depoliticize capital, because in Ethiopia, money became too politicized. The only way you acquire it is if you participate in identity politics, and if you don't participate, then you can easily be pushed out because the greed was networked. So open market auctions starting to become the norm. Joint ventures and investments start happening, because one of the things was, the black market, I'll talk about it shortly, had twice the value. There was literally 100% difference between the bank rate and the black market rate. And at that time, almost very few people wanted to come do direct investment in Ethiopia. Okay? It doesn't matter what it was. The reason is because you have to come through the official channel for your money to be recognized. And if you do, you're going to get the bank rate, which is during the fixed era. So if you are bringing in $100,000, the market value outside is, twice what the bank gives you. You're basically needing to bring in twice as much dollar to do the investment officially. So it was really hard. And, doesn't matter. The agro-industrial ventures and the like. Most of my examples would be the agricultural value chain, because that's what I know a lot about, in addition to health. And so that's what I'll focus on. And also one of the things was Ethiopia wanted, 5 billion Ethiopian birr to be basically the floor for financial institutions to be considered banks. Okay. So what's going on the last 3 months is, a new horizon is happening here. One, open market proclamation, I talked about a little bit, and it opens a lot of things. Ethiopia has been opening, has ended state monopolies in a lot of sectors, be it telecommunication or finance, banks, that is. It has liberalized retail and wholesale. It has given permits to foreign bank subsidiaries. So, like, for example, right now would be the ideal time to have some kind of joint venture. Like, I'm a new coffee, and I'm actually actively seeking for joint venture opportunities, because now it makes sense. Ethiopian Securities Exchange is launched, and it has already started. And I really will I would advise people to start reading about it, because ultimately that's where a lot of things will be happening. And one of the things that is happening is that banks are basically one of the few institutions that are being, that trying to enlist themselves on the exchange market. And the due diligence is a bit strict. So they have to clean up their books quite a lot. And many of them are finding it a hard time. So in Ethiopia, there are about 32 banks. Most of the microfinance institutions, actually the saving and loans institutions, they transformed themselves into banks. Actually, that's actually a nice example I could give you why identity politics has like basically transformed the banking industry in Ethiopia. Under the previous administration, uh, almost all regional governments and CD administrations uh, from early on were guided to establish saving and credit institutions, okay? And those saving and credit institutions functioned at a regional level, and they will have different offices, and they mobilized resources, and they gave out micro and small loans, and slowly started growing themselves. And in the last 8 years, almost all of them became banks. They aspired and transformed themselves into banks and tried to basically attain that 5 billion Ethiopian birr, capital. Now, these institutions, all of them were established under one political framework back in the days, in the 1990s. And they were basically set up by the parties and the coalition members that run different regional administrations in Ethiopia. And they really subscribed to the same political philosophy. But when it became their turn to become banks, not one of them decided to basically bring their money together and uh, be immediately one of the largest, if not the second or third, largest bank in Ethiopia. They didn't go that way. They basically split into their own regional identities, uh, in some cases even lower, and basically became a bunch of small banks. And the reason was, you know, it's the identity capture that I talked about. When ignorance, corruption, and greed is your hallmark, then it is hard to come together, because the whole politics, when the issue is identity, then it's about resource capture. Okay. So it didn't happen. And, but that's a good example. Now it is being forced legally. And the MND framework, the directive that is being, I think it should come out soon. I was hoping this week, but maybe the next couple of weeks. Yeah. And the other one is, there are special economic zones being established and different, incentives being facilitated. Manufacturing, agro-processing, mining, different things are being encouraged in accordance to the homegrown economic reform agenda. It's in the second phase now, okay? The first 3 years, that was phase one. Now we're finishing up the second phase, which is in its last third year, I think. And, recently there's a big news that a $13 billion direct investment was just announced. 10 billion was going into, an industry that will be producing ammonia and a whole lot of other. It's you know almost everything that Ethiopia has prioritized in terms of mining, agro processing, is what's taking place. So that's a good thing. But what has been unique for the last 3 months is how Ethiopia and the national bank specifically has been managing the reforms. So, here the forex convergence is happening uh, in a way that I did not expect. I thought there would be a lot of up and downs, but I think the pace of the proactive nature of the national bank made it, uh, an interesting one. So now artificial Birr pegging is no longer the case. There is a managed devaluation. So the national bank, in a way, is trying to discover what the market rate of the Ethiopian birr is. Okay, so that's happening right now. It sits on 158. And basically, the goal is to significantly bring down or close the gap by depreciating the birr value, uh, so that the parallel market is not that different from the official rate. Okay. Um, and there is a deadline for this. Banks, they have to meet the 5 billion birr capital floor, and if they don't, then mandatory, M&A becomes. And what is so sad is that there's a lot of discussion. Maybe they're waiting for the directive to come out so that they announce. But, you know, almost everyone is trying to end up, rather than trying to find a winning formula, it seems like everyone is trying to basically maintain the status quo. It's as if like it's the government that's really trying to push them, because the financial sector is now open and foreign banks are starting to come in. Actually, the directive is issued, foreign subsidiaries are permitted. The International Investment Bank group based out of Bahrain under the new regulatory framework. That's quite unique. It just happened last month. They took out the first license. There were many with the representative office under the old one. They can't do retail banking. They could only manage relationship. But now, the KCB and Equity Bank out of Kenya, most probably, Standard Bank and others are also trying to come into Ethiopia. But the iibGroup is unique because they're the ones who took the first license under the new regulatory framework. So that is big news. So, and to bring about this really managed reform process, there has been a squeeze on the birr facilitated by the National Bank of Ethiopia. And what it is that, there is an open market operations. That's what it's almost for. And basically, banks are allowed to deposit their birr into the national bank account, and they get a percentage. It's around 15%. And usually, there's a target set by the national bank. And as you can see here in the blue line, for a long time, since January, there was a pretty decent amount in terms of subscription. For example, here it was about 15 billion was the target. So you get 12, somewhere around there, between 10 and 12, 11 and 12, actually. All of a sudden, Ethiopia did a big, gigantic injections of. So this is the trend. I'll describe a little why this liquidity crunch came about, okay? So that was a way of like basically sucking money out of the circulation that the national bank has been doing. So, yeah, so it's been interesting. Now, at the same time, in January, the official rate was around 155. The black market was around 185, actually 186 or something. And the spread was about 19%. Okay. And Now that has shrunk significantly, but one thing that has happened, Ethiopia introduced the forward market, meaning that importers are allowed to basically purchase their dollars now 3 months or 6 months ahead of time. Okay, so that became a good indicator of how the dollar is going to behave. And if you look at the individual banking data, it's an interesting one. But collectively, though, now the forward rate is around 170, and even the spread between, so the birr has been depreciating slightly. Also the black market now is really hovering around 180, and it's been stuck there because nobody wants to believe what's happening. But sooner or later, because in Ethiopia, when you've been dealing with the black market, there has never been an occasion where the birr appreciated, to be honest. So, so that's two things that happened during this time, which was the Ethiopian National Bank injected in 2 rounds $500 million each, and of dollars into the banking system, and that really sucked a lot of the birr out. So that's part of the reason when I talked about earlier about the Birr Squeeze as well. So this is specifically the auction settlement, and it's a gliding path. It's not a aggressive one, but it's a nicely well managed. And as you could see, by the way, there was only been a few incidents. I think one where after 2 rounds of big auctions, there was an undersubscription once because banks didn't have birr to buy dollar, and then immediately, this is also one area banks are now competing. Okay, because if your forward rate is high, then the banks with the lower forward rates would likely have clients coming to them because there's no point in paying more for it if the dollar is available. And the second one is, in the past, there was importers who really went to the black market. And now, why would you go if you could secure your dollar 3 months ahead or less the price? So that's why it's really a systematic approach to the whole thing. For someone who studies systems thinking and systems dynamics specifically within that, then you find interesting how different tools are being used to really squeeze and really bring the parallel market. It will be, of course, obviously there will always be parallel markets, there will always be black markets, there will always be people trying to do things under the table. So, but that should not be the main feature of the economy. This one should be. So now that's happening. So just to give you a few concluding remarks, the structural pivot has started. I mean, if you still don't believe that the reform agenda is meant to clean up the system, if you think systemic corruption is going to be the defining feature of our economy, just keep following the National Bank of Ethiopia. Okay, how you manage money will say a lot. Doesn't mean that elites will not be around. Doesn't mean that corruption is not going to be around. But increasingly, they're being pushed out of. The In the past, there was no difference between the parties, the businesses, and the government. I mean, it's not even three different faces. It was like a one and a half. Okay. Now it is increasingly. That's why you see a lot of unpredictability, be it in the corruption side of things and the like, because a lot of people are beginning to notice it. Ordinary people just know that life is slightly, every day gets harder because inflation is still happening. Even though it's in the single digit, it doesn't mean that things are not getting expensive. The ability to move around is highly compromised. due to security issues. But overall, the system has found a way to really start clean up the financial system. Okay, so that's a big win, because everything else is secondary. If you cannot clean the financial sector, then it is almost impossible to clean the rest. Okay, so the convergence, the parallel and the official is happening. So that's a big win for the National Bank of Ethiopia. To decrease almost $6 from the parallel market, 6 birr from $1, and while appreciating the birr value by almost 4 birr, that's a big squeeze. Okay, if you compare it with the forward markets, that's even less. Okay, now businesses don't really have a lot of money. Banks don't have a lot of Ethiopian birr. Birr is king now. Okay, if you want to buy dollars, you need birr. Birr is hard to come by. So that is also part of the mechanism how we're, managing the inflation, everything else. And interestingly, with all this conflict that is taking place in the Middle East and the oil shortages, the lining up and everything. By the way, don't expect it to impact inflation a lot, at least in the Ethiopian case, because it might end up actually helping, because it's another way, since it's the government that imports fuel and fuel prices have gone up, it's another way of sucking birr out of the economy, okay? Because it's going to go into government coffers. So, yes, the price increase will be there, but at the same time, additional burden is being introduced in the economy, where birr that would have been used for buying other things all of a sudden is not being used for that purpose, and it's not going into the private sector, because birr is the fuel is primarily supplied by the government. So there's an interesting thing that would likely happen. So there's a good thing actually in terms of from a macro monetary financial perspective. And the banking sector shock is something you need to watch for. After June, the Ethiopian banking system, actually, since January, it has not been the same, okay? But what is interesting is that there's a little bit of paralysis, a little bit of sleepwalking on the part of the banks. I don't know how many times I've heard the National Bank of Ethiopia and its officials talk about the future that is being created. And I guess, they're busy doing the status quo at a faster pace, rather than really sitting down and fixing the systemic failures that you were encountering. So now banks are starting toward birr as well, because they need to participate and buy dollars to stay viable. At the same time, they need to meet the 5 billion birr minimum capital requirement. But it doesn't end there. Okay, so and the last OMO auction, out of whatever amount the National Bank was willing to accept, only 3 billion was collected, which was about 20% of the target. So which means that a lot of banks were not, even though they were getting a better rate for their birr, they didn't have enough liquidity to park it there. So they basically kept it. And so liquidity crunch is real. And also there was a big study released by the National Bank of Ethiopia that found only 5 banks to successfully pass its failed stress test. Okay, the other 26, yeah, didn't do so well. So now solvency is going to become an issue, and that's why the merger and acquisition is also being. So can't wait to see the details, to be honest with you. And the re-entry of private capital. That's Ethiopia used to have an open banking system until the 1970s. Okay, with the when the monarchy was gone, the new regime, the socialist regime, military socialist regime that came and nationalized all private big businesses, including banks. So that's how we ended up becoming a closed financial system. So now, like I said, one bank took a license out under the new law. KCB and Equity have been talking. They've been active for quite some time, but there were a lot of things for them missing. Now I think most of the things that the type of reforms that they were looking for seem to be in place. Agro-industry parks and other special economic zones seem to be attracting investors. And the government has been doing quite a good job with that. We're seeing the type of numbers that we haven't seen in a long time. So looking ahead, the next 3 months is going to be fascinating. Okay, I'll do another one most probably in July. And so June 30 is a deadline. Every bank must hit 5 billion. There are a lot of banks that will be like, I think maximum maybe 15, 16 of them will meet. So 50% will achieve that. The other 50 can't. So there will be a high stakes battleground for Birr. There a lot of them are hoarding because they want to be in a good position and they want to defend. So unless you're able to access dollars from the auction, in the past, service exporters automatically surrendered all their dollars. Product exporters 50%, but moving forward, every exporter will get to keep their dollar. So banks have very little options other than the auction. And even Ethiopians could keep their money in dollars. So even if they have a family member sending them, dollars or other, exchangeable currencies, they can keep it in a dollar account. You don't need minimum dollar, anything. And any Ethiopian would just walk in and open a dollar account. So that's going to make the banks a bit more competent to stay in the business. So yeah, and the liquidity squeeze intensifying both by the national bank, also what's going on with the fuel crisis due to the conflict in the Middle East. I don't know how the M&A directive is going to manage the forced engagements, for a lack of a better word, but even if it doesn't, it just gives you the guideline. As a bank, you will not be a viable bank if you try to stay within your own little niche and identity. So if your identity-based banking approach is not going to work, for the simple reason that Ethiopia does not have a majority. There isn't a 50 plus identity that prevails in Ethiopia. Okay? What that means is that everyone is a minority, be it linguistically, ethnically, religiously. So unless you bring in a shared identity, then it becomes hard to diversify your base. And some banks are really good at a particular geography. Some banks are really good at retail banking, like mobilizing money from small income households. Some are good at mobilizing resources from the corporate side of things. But no one is good at everything. Some are good in digital banking, other are not. So it is in your best interest, hopefully, if you're listening, to really find the path that maximizes your position. And to do that, interestingly, looking at the different banks, those that establish themselves based on identity, their client base tend to overlap. So even if you merge, you're not really bringing in new capital into your bank. So, you're going to have to think twice about it. So, I'm looking forward to some interesting mergers that may not make sense politically, at least looking at our past political history. But moving forward, that's the only way you're going to survive as a bank. Okay? So it's going to be interesting. And the Birr gliding path, expected, the forward markets, their rates are predictive in a way. They give you stability, but predictability at the same time. So they're hovering around 170. So for me, that's what the Ethiopian Birr is going to be slowly. Okay. And we'll see how it is. And also another thing that I'm expecting is, to exacerbate the Birr liquidity issue so that there will be a lot of stress on the banks that shouldn't be surviving as a bank to begin with, is that I wouldn't be surprised if there's another big or special auction coming up from the National Bank of Ethiopia. So yeah, that's pretty much it. And this is also why I'm doing a lot of the work I'm doing. I've never really made it public. Maybe I do panel discussions here and there, and I pretty much limit my discussions to coffee specifically, never really to the economic system or the reform that has been taking place. But sometimes, I'm on LinkedIn, so that's the only one I do now. And I reflect on these things. And, the only thing I could say to the banks is like, there's a saying in Ethiopia, it's like, mot like arman karar, you're gonna die anyway, so I might as well, just let go and do what needs to be done. There's no point in resisting death, this kind of thing. So I feel like that's where we're at for the banking industry. Either you reinvent yourself in a new way, in a way that you're not used to, because Ethiopia allowing private capital in Ethiopia to be established, to open up banks, they're literally, it was a politically managed process, and the politics was identity-based politics. So the only way you came about was that either because the politics allowed your participation or because the politics pushed you out of the participation. So you found it convenient to organize yourself, even when you run a position based on identity. Okay? So it's a few shareholders that really benefited from owning a bank. And that's what it is. And things are changing. And this is why I think because I pay attention to these kind of systemic changes, is the reason why, when I get into discussions or arguments with a lot of people, they tend to see the day-to-day hardship, the challenges, this and that. For me, I see how the system is trying to clean itself up in a way that would make a big difference moving forward. Because if you don't change the system, but you keep changing people, then, that person or that group of individuals you brought in will end up being dirty down the road. But if you change the system, even while you keep the dirty ones, slowly the dirty ones, either they leave or they start cleaning themselves up. So, and I feel like this is a healthier approach. So we'll see. Expect a special session again in July. And thank you, and have a good one.